Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. Last week was the first earnings report that we saw after the legalization in Canada. And with that, we have Canopy citing a spreadsheet error for underreporting their adjusted EBITDA, or the earnings before interest, taxes, depreciation, and amortization. And so find it very fascinating that a company that's publicly traded can have a spreadsheet error. Just goes to show that this is still a very young industry that doesn't have the same resources and top talent that a different publicly traded company might have, because this wouldn't necessarily happen. The correction was made due to a formula error in the spreadsheet supporting the year-to-date adjusted EBITDA loss calculation. The adjusted EBITDA loss for the 3 months ended December 31st and was corrected as reported, as were all prior quarters as released. It was cited purely clerical in nature. It didn't represent a restatement of the company's previously issued operating performance. And ultimately, the error was due to a figure where it didn't add up all of the 9-month periods correctly. This isn't the first time Canopy Growth had to refile. And a result of the restatement, Canopy reported a net loss that was $16 million down to only $7 million. So if a huge company like Canopy is able to make a simple error like that, what can you do to protect your own financial situation? Here's an article that solves the financial mistakes made by cannabis businesses. Qualified accountants and bookkeepers are amongst the most important positions in the industry. There's a considerable void in the space where financial expertise is desperately needed. In order to navigate the tricky waters to tight regulations in an industry that's still federally illegal, cannabis companies must hold themselves to a higher standard, borrowing from other sectors to implement a set of best practices that will keep their businesses afloat while establishing credibility on a broader scale. So here's the top 3 financial problems that cannabis companies most commonly encounter. Number 1 mistake is not hiring employees with the right set of skills. One prominent issue that the cannabis industry currently faces is that there's many companies simply haven't hired the right people with adequate knowledge or expertise to keep them in compliance with the nuances and stringent state and federal tax rules. Instead, many cannabis businesses employ bookkeepers who often lack accounting degrees and aren't experienced in accrual, GAAP, which is generally accepted accounting principles, or cannabis cost accounting. So this hiring practice over time can lead to a number of obstacles, including not being able to maximize allowable tax deductions. In other cases, cannabis CEOs take the crucial activities themselves. For many executives, carrying out the financial responsibilities of the business comes at all too high of a cost, taking away valuable time that could otherwise be utilized expanding the business, while simultaneously allowing important details to slip through the cracks due to the lack of specialized knowledge. Number 2 mistake is not maintaining a constant state of audit readiness. To avoid a total loss in the competitive and crowded cannabis space, CEOs must specifically run their business to minimize any risk of being shut down. Unfortunately, too many of them fail to recognize how fundamental compliance is to running a successful cannabis business. Remaining full in line with city, county, state, IRS, the Food and Drug Administration, Occupational Safety and Health Administration, environmental protection agencies, all of these regulations and being prepared for an audit at any moment are key to surviving in the nation's most highly regulated industry. Organization lies at the root of any healthy company. And this is especially true within the carefully watched cannabis industry, in which there are countless complexities to maneuver across a variety of different verticals, from cultivation to retail, as many as different layers of regulation. As such, companies must be certain that they maintain an operational and financial compliance. Through the end of month reports, scorecards, metrics, they must all be generated. Additionally, it's best for companies that have a perpetual data room, meaning financials, accounting records, to support organizational documents, leases, contracts, payroll records that are not only audit ready, but are also investor ready, board ready, CEO ready at all times. This allows the businesses to circumnavigate tricky regulatory issues, avoid failing victims to healthy penalties or revoked licenses in the ever-growing graveyard of failed cannabis startups. The number 3 mistake is neglecting the bigger picture. Although its products may be top of the line, a company's risk of going under starkly increases without top of the line accounting, tax, finance, compliance, risk management, legal, and other necessary practices to match. Comprehensive accounting policies and procedures are imperative to protect the business from any problems that might steer off course. This involves building an internal control document that serves the company's standards operating procedures for every major accounting cycle, as well as creating a tailored chart of accounts. To be successful, cannabis companies should have a financial department that provides complete, accurate, timely financial statements that comply with GAAP, a robust internal control system, including proper segregation of duties and safeguarding of critical assets, detailed accounting policies and procedures, electronic storage of all documents, and appropriate hard backup source for documents such as invoices, sales receipts, key performance indicators, as well as timely cash and tax forecasts. In an ideal situation, a company would also have an experienced chief financial officer who aids in the designing of the systems, reviews the accounting work, handles the financial and forecasts, participates in strategic decisions, and acts as a liaison between legal, tax, accounting, audit, IRS, and acquirers and all third parties. Additional cannabis business owners should bear in mind that the importance of using proper software that's tailored to the company's unique size and niche. Overall, this leads to a better access to capital, stronger reporting, more favorable investor relations, higher valuations at exit, and fewer headaches overall. Navigating a convoluted space, the lack of world-class accounting underscores nearly every cannabis company's financial woes. The state law and IRS law clearly lays out that a cannabis company must conduct accounting correctly. Failure to do so will result in large fines, penalties, and loss of license. By paying close attention to the mistakes others have made and focusing on an active effort on avoiding them through best practices, businesses can learn better how to navigate the convoluted financial category of the cannabis space and ultimately build a thriving business during this exciting time of unprecedented growth. And with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge, and I'm out.